This is Horizons Middle East and Africa. Our top stories this morning. U.S. and European stock futures fall and safe havens surge as President Trump threatens new tariffs on the U.K. and EU allies in his pursuit of a Greenland takeover. Anger in Europe. EU leaders set to hold an emergency meeting on Trump's tariff threat as member states weigh retaliatory measures, including levies on 93 billion euros of U.S. goods. And President Trump's so-called Board of Peace for Gaza is beginning to take shape, but Israel's Benjamin Netanyahu voices his objections to parts of the plan. It's just gone past 9 a.m. across the Emirates, 7 a.m. here in Johannesburg. I'm Jennifer Zabasaja in for Jumana Bersetchi, and as we just pointed out there, markets are facing a fresh bout of volatility this week over those comments that we did hear and some of those threats that we heard from President Trump on European allies over Greenland. We are going to see U.S. and cash and equity markets in the U.S. are closed today for the MLK holiday. But still, we are seeing a risk-off mood taking shape if you take a look at futures and also in the Asian session. We'll get to Winnie Xu in just a few minutes for that. But let's take a look at NASDAQ futures right now, down more than 1%. The price action into the weekend last week, if you can remember, was largely focused on this changing of decisions potentially for the next Fed chair, and also we were amid bank earnings. Now it's looking like the week is really and potentially going to be dominated by geopolitical events, and we're seeing that really percolating throughout the markets. If you take a look at where Euro Stock 50 futures are, also down more than 1.2%. That potentially threatening what we've seen with Europe's recent equity bull run. So one to watch throughout the day. And also as we continue to hear from more European leaders. Gold also up on the board. Safe haven demand supporting precious metals, especially gold right now, up more than 1.57%, jumping to a record high to trade near $4,668 an ounce. Most analysts that Bloomberg has been speaking to expecting more upside for gold. In particular, Citigroup forecasting, though, that gold could reach $5,000 an ounce within 3 months, and it's looking like we're continuing to see some upside. Silver is also notably up on the board. Citigroup expecting silver to get to $100 within 3 months as well. As you can see, spot silver is about $93 there, up more than 3.2%. So really contributing to more of that broader rotation into precious metals right now. And let's just pivot to our terminal board right now, and that is on that search for the new Fed chair. Of course, as I was mentioning last week, a lot of the discussion was about potentially Kevin Hassett being out. The surprise for many markets, as you can see in this board here, but really what is kind of surprising for people is this expectation now of Rick Ryder emerging as potentially the lead for the next Fed chair. So this is just a look at the Fed chair odds and how they've really moved dramatically over the past few weeks. Let's check in, though, on how markets in Asia are faring. Winnie Xu is in our Hong Kong studio paying close attention to them. Winnie, what are you watching?
Morning, Jen. So we are seeing that risk-off sentiment spilling over to our region as well, with the MSCI Asia here fluctuating a bit under pressure, but perhaps slightly less than what we're seeing in Europe and the U.S. In terms of haven assets, it's also gaining, with the Japanese yen here strengthening slightly past that 158 level against the dollar. However, Korea's Kospi index really going ahead all these headwinds and still rising for a 12th session to another record high. And when it comes to the bond space, we're looking at Japanese 30-year bond yield still melting up after a report saying that the ruling party is now considering a tax cut on food. And we'll be closely watching out for the press conference by Takaichi later today in terms of that snap election expected next month. Now, flip aboard and take a look at what's going on in China as we want to break down these key numbers for you when it comes to the economic data. While we are seeing that overall, the yearly GDP came in line with expectation. Actually, the fourth quarter GDP is growing at its slowest pace. It's growing at its slowest pace compared to some of the previous quarters, and that is also weighing on some of the other numbers that we're looking at when it comes to retail sales slightly softer and also industrial output a bit stronger. However, when it comes to the annual numbers for the fixed asset investment, it's actually down 3.8% year over year, and that is the first time that we're seeing an annual decline in more than 3 decades. Back to you, Jen.
Yeah, important data to point out there. Winnie Xu in Hong Kong, thanks so much. We'll check back in with you in just a bit. Let's turn back to our top story, though. EU leaders are set to hold an emergency meeting in the coming days to discuss President Trump's latest tariff threat as they explore possible retaliatory measures. Treasury Secretary Scott Bessent amplified the president's message to European allies, saying that the U.S. won't back down on taking over Greenland.
If there were an attack on Greenland from Russia, from some other area, we would get dragged in. So better now, peace through strength, make it part of the United States, and there will not be a conflict because the United States right now, we are the hottest country in the world. We are the strongest country in the world. The Europeans project weakness. The U.S. projects strength.
Strong words from the Treasury Secretary there. Bloomberg's Oliver Crook joins us now from Brussels. Oliver, take us through what Trump has threatened and really the timeline that he's laid out here for some of these potential tariffs.
Yeah, Jen, if you blink, you can kind of miss it. I mean, on Saturday night, the Truth Social post came out, and it was this threat that really put something very concrete on basically what the presidential actions are going to be in order to try to advance his ambitions of basically taking Greenland as part of the United States. It's a conversation that's obviously been front and center in Europe here for the last couple of weeks, something that the president has really sort of amplified, but basically saying that all of the nations that set even these sort of symbolic number of troops to Greenland to take part in some of these military exercises, and we're talking about really fewer than 40 or 50 troops in total from all of these countries, that all of those countries will now face a 10% tariff beginning February the 1st, and that will ratchet up to a 25% tariff in June if by that period of time, basically Greenland is not on the path or not totally within the United States. Now, the countries that Trump is aiming for these tariffs are Denmark, Norway, Sweden, France, Germany, the United Kingdom, the Netherlands, and Finland. And we've heard from most of the European leaders here over the weekend, either out on X or elsewhere, basically being completely in solidarity with the Danes, with Denmark on this issue of Greenland. We also heard from the European Council President Antonio Costa, who has called, as you mentioned, an emergency leaders meeting here in Brussels on Thursday in order to discuss the situation and how to proceed. He said that basically that there's full unity on the principles of international law, territorial integrity, and national sovereignty. There is total unity and support and solidarity with Denmark and Greenland. There is a readiness to defend ourselves against any form of coercion and a readiness to engage constructively with the United States on all issues of common interest, and that will culminate in that leaders meeting on Thursday that will be held here in Brussels.
And Oliver, clearly condemnation coming from all of these EU leaders, as we were just seeing on the board there. But what measures could we potentially see in response from some of them?
What I think is interesting, Jen, is as ever, the Europeans are taking a sort of more muted approach at the very beginning to figure out basically the nature of this threat that Donald Trump is now imposing on them, how real this is, how real this imposition of tariffs will be on February the 1st. So for the time being, they're going to hold off on doing anything in the sort of fear of angering the President of the United States any further. We had ambassadors meet yesterday, last night. We have finance ministers in Brussels today to meet. And then, as you mentioned, as we were just talking about, the leaders meeting on Thursday. But basically, overall, it's a very calibrated response right now. I think the fundamental question for the Europeans, have they found the end of their rope on this question of appeasing the United States? Is this the time at which they need to strike back? We've heard from Emmanuel Macron. He has put very actively on the table, putting out this anti-coercion instrument. This is going to be the most sort of powerful trade instrument the Europeans have to retaliate. But it's a very sort of finely balanced response, Jen, that they need to have to the President of the United States, because it's not just about it's not just about tariffs, but it's also about support for things like Ukraine that could be jeopardized if the Europeans go in too strong.
Certainly. Oliver Crook there starting us off. Oliver, thank you so much for that report. Now, let's unpack the potential market implications of some of these latest geopolitical developments. Joining us is Anita Krishna Gupta, Wealthbrix Capital Partners CIO, joining us in Dubai. Anita, let's just start where Oliver was leaving us off there. Quite a bit of tension heading into the week in terms of European leaders and the U.S. right now. Where do you potentially see the most concern in terms of risk appetite for some of the assets and your own allocation right now?
Yeah, good morning, Jennifer. So the way that we are looking at it, 2025 was about trade, tariffs, and Trump and TACO. Those were the key words. When we are starting 2026, we thought that the key words were affordability, AI. And what we are moving from is economic supremacy. So last year, the trade tariffs were really in view of getting manufacturing back to the U.S. We have seen China on a similar path where they want consumer spend to increase. So economies are focused domestically. But now what we are seeing this year, it's a different kind of supremacy that's coming in, whether it's starting from, Venezuela going on to Greenland. So geopolitical risk has increased dramatically, and that has led to a rise in safe havens, starting with, of course, gold. So gold had a great year in 2025. It was up about 47%, silver up about 147%. Sorry, gold was up 60%. Now, what we are looking at in 2026 is that it's a similar story. We've already had a rally in gold and silver. We've got silver trading at about $93, gold trading above the 4,668 handle. So where do we go from here? How are we positioned? We are still constructive risk assets. We have seen earnings very, very positive. Expectation is 14% globally. But earnings are taking a backseat at this point to other geopolitical events that are happening. So we stay very constructive, but we would watch the geopolitical landscape carefully.
What would potentially make you more concerned or more cautious about, at least if you take a look at some of the markets and the valuations and your allocations as we progress into 2026?
So, Jennifer, absolutely, it is the concentration of tech, AI, and the top stocks in the S&P 500. Top 10 stocks are around 40% of the S&P 500. Earnings contribution is around 25%. Similar story with the Max 7 in terms of concentration. We've yet got a very strong earnings growth story from the Max 7, about 22% earnings growth compared to the rest of the S&P 500, which is at about a 3 to 4% if you take out the Max 7. We've also got a very high ROE from the Max 7 at around 45%. So you've got high ROE, high earnings growth. So concentration risk remains, and you've got the same concentration risk of the Dragon 7 in China. So that's not an uncommon story. So earnings have to meet expectations or beat for markets to stay where they are.
Do you feel that there's continued upside for the U.S., or do you look elsewhere, ex-U.S. potentially? We were talking today. China is down, but not seeing as negative downside as U.S. and Europe futures right now.
So our outlook for 2026 predicates a growth in both fixed income asset class as well as the equity asset class. So we have a portfolio allocation which starts right from money market going on to safer bonds on the sovereign side. And then our preference is for local currency emerging market debt. As we see the dollar slightly weaker in terms of equity allocation, we have a full allocation to the U.S. So we are neutral. That means we are fully allocated. It is the largest allocation within our whole, strategy. We are at this point overweight emerging markets, and that's also, we have seen a little bit of a rally coming there. We are neutral China, but we like China tech. We like the UAE for both its growth and dividend yield. And we have an allocation to silver and gold. We think that 5% of portfolios in a balanced strategy should be silver and gold.
So you believe gold and silver need to be core in terms of portfolio allocations, not just in terms of hedging?
Absolutely, and it's an allocation for the next decade. While there are several outlooks, but we think that the return from gold over the longer term is going to be 10% per annum. When we are looking at gold, besides being a safe haven, we have seen central banks buying gold. And that is also coming, it's not just about the debasement trade. It's about the fact that, gold as a reserve currency is gaining importance.
All right, we'll leave it there with you. Anita Krishna Gupta, Wealthbrix Capital Partners CIO. Thank you so much for your insights joining us there in Dubai. Now, coming up, Donald Trump's Board of Peace for Gaza is beginning to take shape, but Israel is unhappy over the lineup. We are live in Jerusalem with the details next. This is Bloomberg. Donald Trump's so-called Board of Peace for Gaza is beginning to take shape, but Israel has voiced rare objections to parts of the U.S. president's plan to build on the fragile ceasefire in the region. The Trump administration is also asking countries to contribute at least $1 billion to get a permanent spot on the new Board of Peace. Let's go to Jerusalem now and speak with Bloomberg's Dan Williams. Dan, walk us through who we know is potentially going to make up this Board of Peace and what some of the objections are to it.
The Board of Peace is the upper echelon of this really rather ambitious and quite bewildering superstructure that the U.S. president is setting up to oversee an ambitious plan to transform the Gaza Strip from its current war-torn ravages to something resembling a Riviera in the Levant. Now, this superstructure, at the top of it, crowning it, would be a Board of Peace. This would be chaired by the president, by Trump himself, along with other serving heads of state and heads of government. Apparently, he's already invited the leaders of Argentina, Canada, Turkey. There's talk he might even invite the Israeli prime minister. However, as reported by Bloomberg over the weekend, some misgivings have been expressed over a draft charter for this Board of Peace that would require permanent members to pay a buy-in sum of $1 billion or more. Already, the Canadian leader has said this perhaps might be something that would be agreeable to Canada. Tony Blair, the former British Prime Minister, someone who's involved in the Gaza plan, has also voiced misgivings through his spokespeople. So it's a big question as to whether the implementation, according to this draft charter, is possible, and also what the long-term plans are. The Board of Peace does not speak specifically about Gaza. It appears to be far more ambitious, global ambitions potentially, and there is some speculation that perhaps Trump sees this replacing or posing a rivalry to the United Nations. He's been very open in his criticism of that established forum. So time will tell whether the Board of Peace, as currently envisaged, will take shape. Underneath the Board of Peace is an executive board. This is more of a hands-on authority that would oversee the Palestinian government envisaged taking over, ousting from Hamas rule in the Gaza Strip. That, the makeup of that was announced by the Americans a few days ago. It includes the Turkish foreign minister and a Qatari diplomat. Now, the Israelis are unhappy about this. They want to distance Turkey and Qatar from the post-war planning for Gaza, and therefore, as you noted, rare umbrage from Israel over that as well.
Potentially we hear from Trump on this in Davos this week. Bloomberg's Dan Williams in Jerusalem there. Thanks so much, Dan, for that report. Now, for a look at some of the other stories we're following this morning. Syria's government and a U.S.-backed Kurdish group have agreed to end clashes with a new deal expanding the regime's control over vital territories and resources. The agreement includes a ceasefire, the SDF retreating east of the Euphrates River, and the group relinquishing authority in eastern provinces to the government and military. This deal now puts the Syrian government in charge of border crossings as well as gas and oil fields. Bloomberg has learned that Ukraine is holding off on additional orders for strike drones from Helsing, which is Europe's most valuable defense tech startup. The move comes after the company's weapon system is said to have faced problems in frontline tests, according to a German military presentation. Helsing says the company is not aware of the presentation and rejects Bloomberg's findings. Now, coming up, a wave of planned IPOs could reshape confidence across Gulf markets. We have that story next. This is Bloomberg. A handful of major IPOs set for 2026 could play a decisive role in shaping investor confidence across Middle Eastern equity capital markets. While some bankers say the pipeline is promising, several IPOs will need to price and trade well in the first half to reestablish confidence. For more, we're joined by Bloomberg's Laura Gardner-Cuesta. Laura, last year's IPO pipeline, as we've reported, was quite subdued in the Gulf. How is 2026 shaping up?
Hi, Jen. Absolutely. So last year, we saw volumes drop across the Gulf due to a combination of factors, softer oil prices, a few soft debuts, and the fact that the rest of the world, or like IPOs across the rest of the world, were back online. So this year, we've spoken to a few bankers, and they're saying there's a number of deals that could test appetite, a few large deals, but a lot will hinge on how they trade. So one of these large deals is in the UAE. It's Emirates Global Aluminium. It's jointly owned by Dubai and Abu Dhabi, and it could potentially be one of the biggest IPOs for the Emirates. We've also got a few real estate-linked deals across the UAE. And they're essentially trying to capitalize on Dubai's ongoing property market boom. So we could see a few of those deals, particularly after Ramadan ends in March. The picture in Saudi Arabia is slightly different. So they've had one of the worst performing equity markets in the world last year. And so they've been trying to do a few reforms to boost sentiment, including allowing international investor participation. So we could see a few more deals from Saudi as well, but investors will be much more discerning than what they have been.
And Laura, maybe you can quickly tell us about some of your reporting around Dubai World Trade Center and UK's Informa Group.
Absolutely. So this is one of the deals that could materialize, or at least is in the works for this year, rather. So Dubai World Trade Center and Informa are going to create a joint venture that will operate one of Dubai's largest conferences, like Dubai Air Show, GITEX. Dubai residents know how large the crowds are when these events happen. So they're looking to capitalize on this and potentially list the events business. And this is something that we're seeing across the Gulf, by the way, not just in Dubai, as part of the economic diversification plans. So.
Right. Bloomberg's Laura Gardner-Cuesta. Laura, thanks so much for your reporting and for joining us. Appreciate it. Now, coming up, as gold and silver prices surge again, we discuss haven demand with David Wilson from BNP Paribas. Stick with us. That's next. This is Bloomberg. This is Horizons Middle East and Africa. Our top stories this morning. U.S. and European stock futures fall and safe haven surge as President Trump threatens new tariffs on the U.K. and EU allies in his pursuit of a Greenland takeover. Anger in Europe, EU leaders set to hold an emergency meeting on Trump's tariff threat as member states weigh retaliatory measures, including levies on 93 billion euros of U.S. goods. And President Trump's so-called Board of Peace for Gaza is beginning to take shape, but Israel's Benjamin Netanyahu voices objections to parts of the plan. It's just gone past 9:30 a.m. across the Emirates, 7:30 a.m. here in Johannesburg. I'm Jennifer Zabasaja in for Jumana Bersetchi. And as we just noted in those headlines, markets clearly facing a fresh stint of volatility this week, largely dominated by geopolitics and those comments and threats from President Trump over Greenland. And we're already seeing that taking shape in the potential or in a bit of the risk-off mood that is setting in for Asia markets. U.S. cash and equity markets are closed today for the MLK holiday. But if we just start with futures right now, down at NASDAQ 100 futures down more than 1%. The price action going into the weekend, though, was focused on potentially the next chair for the Federal Reserve. We also had major bank earnings. Potentially, though, this week is dominated by geopolitics. Eurostock 50 futures also feeling a bit of the downside, negative trade right now. Potentially, we could see that shaking up some of the equity bull run that we had seen for Europe over the past few weeks. Eurostock 50 futures down more than 1.3%. Safe haven demand, as we've been speaking about, and we'll speak with our next guest about in just a few minutes, continuing to push gold and other precious metals up. Gold is up more than 1.64%. Many analysts are expecting continued upside for the yellow metal. Citigroup actually forecasting gold could reach $5,000 an ounce within 3 months. They also expect silver to reach $100 in the next 3 months. Right now, we're seeing spot silver at about $93.50 there, and up more than 3.72% today. Let's just end with our terminal chart on the next Fed chair. I mentioned last week quite a lot of discussion about potentially who it might be. And the surprise twist that we got late last week is potentially markets voting Kevin Hassett out and potentially Rick Ryder in. And he came out of relative obscurity is what many markets are anticipating. Really, the question, though, is where does this leave the betting odds for who will be the next Fed chair? And that is what we are showing there with our current terminal chart. Let's, though, check in on how markets in Asia are faring. Winnie Xu is standing by in our Hong Kong studio, taking a closer look at what the session has been like. Winnie, what are you watching?
Yeah, so overall, it is a risk-off day for our region, but we are seeing into the afternoon session that the MSCI Asia is rebounding a little bit. That's mainly being driven by gains led by Korea's Kospi index. We're seeing the index actually rising for a 12th day and now breaching that 4,900 levels, inching closer to that 5,000 target that President Lee Jae-myung has set for as a target. In terms of cross-asset, we are talking about the Japanese yen gaining on that haven asset bets, but also the Japanese yields here melting up after a report saying that the ruling party is now considering some tax cut when it comes to food. And we'll be closely watching for a press conference by Prime Minister Takaichi later today on her plans when it comes to snap election expected later this month. Now, flip the board and take a look at how the food sector is actually doing after that report on the food tax cut. We are seeing that Japanese food-related names, Aeon, for example, the supermarket name, and also Yamazaki Baking, these are all rising. But on the other hand, another interesting stock that we would like to highlight today is the A2 milk stock here, slumping more than 10% in Australia and New Zealand. And that's coming after data showing that China's birth rate actually fell last year to the lowest since 1949. And that is weighing on the stocks when it comes to the food sector in Australia. Back to you, Jen.
Thanks so much, Winnie Xu in Hong Kong, for walking us through the Asia markets. Now let's get to commodity check. Gold and silver have jumped to record highs after President Trump announced tariffs on 8 European allies that are opposing U.S. plans to take over Greenland. Trump's aggressive move is boosting haven demand amid fears of a damaging trade war between the U.S. and Europe. And joining us is David Wilson, Director of Commodities Strategy at BNP Paribas. David, thanks so much for joining us. Quite a great day to get you on. Let's just start here with gold, because we mentioned we are continuing to see some upside for the yellow metal here. You believe that the balance of risks to gold very much remains on the upside. Talk to us about what sustains that view from your perspective.
Well, I mean, gold thrives on uncertainty. We saw it all the way through last year. And we were obviously hitting highs all the way through last year. And we continue to see a lot of that uncertainty at play now, whether it's, I mean, obviously this weekend, as you mentioned, the issuing of tariffs against a number of European countries. But beyond that, as in your previous section before this, we were mentioning of the uncertainty over the Fed chair, uncertainty about rates. We have a perception that we might see some more inflationary pressure given the impact of tariffs that were introduced last year. So I think every basket of or type of support that you see for gold is at play at the moment, supporting the yellow metal. I mean, we actually forecast back in November that we thought that gold was going to hit 5,000 sooner or later, and I mean, it looked quite a big call back in November. When you look at gold now, I mean, we're within touching distance of 4,700, so 5,000 is really not too much of a stretch right now.
David, then do you potentially increase the ceiling for where you see gold, at least in the near term?
I mean, I think we have to start considering that, given the extent of the move we've had. So where 5,000 looked like a big target, we're $320 away from that. Quite clearly, given this sort of sustained uncertainty, we have to look at a higher target level. I haven't put my finger on what that's going to be yet, but quite clearly we can go through 5,000, and if we do so and sustain a move above 5,000, then obviously further upsides to come.
David, you also note silver's parabolic rally. We were just looking at what we're seeing right now for silver, up more than 3%. But you say potentially it's not sustainable. Do you see a correction in the near term, and what exactly is the catalyst for that correction?
Yeah, I mean, that's a very good question. You have to consider silver's a much thinner, less liquid market than gold, and it started really moving in this sort of parabolic fashion really sort of mid-December, and there are a number of catalysts. One was the announcement of sort of the announcement of collateralization of silver by India. That became sort of more aware in Western markets, sort of late October, early November. Then we had concerns that China might start restricting silver exports with the new licensing arrangements, and then obviously there was a concern about US tariffs on critical minerals, and silver was at the head of that list. All those issues were sort of prompting silver to be sucked out of the physical European market vaults there into the US, and that really tightened the physical market and was the catalyst for the upside. Last week, we obviously had the announcement from the White House that there weren't going to be critical mineral tariffs yet. They would look at negotiating some forms of trade agreements. I mean, we thought that was going to be the spark for some degree of correction, and we did. I mean, actually, on that Tuesday, we did have about a 6-7% correction in silver. But obviously, then it's leveraging off gold right now again with geopolitical uncertainty and finding more upside. But the physical market's definitely easing. Lease rates are dropping back quite substantially. So those kind of issues look like they're dissipating. And I think the other thing you have to think of is, as I mentioned, it's a thin market. As soon as some of the speculative flow starts looking to take profits, then it's quite likely we could get quite a significant correction. But I mean, I'd agree with what you were quoting earlier, saying $100 upside. Yeah, I think we'll probably get that sooner rather than later. That might be the sort of profit-taking level, right, and we could see a drop back from there.
David, let's just finish on copper, because we have seen it rally on potentially supply shortfalls. But you don't actually suspect that some of the price action is actually telling the full story. Can you get into that really quickly?
Yeah, I mean, there's a number of issues. I mean, again, some of it's tariff related. We've seen a big shift of copper units into the US over the last year because of fears of a critical mineral tariff on refined imports. But interestingly, the US back in November flipped into being a net refined exporter. The ARB collapsed. The incentive to move copper units into the US pretty much gone. December, minimal net imports. So that sort of argument that fear of tariffs was tightening the ex-US market, tightening liquidity, removing sort of physical units, That was an
Right.
argument in the year to September. It's no longer an argument now. And then in other areas, we look at China, for example. I mean, China's refined production in the year to November last year was up about 7-8%. So huge growth. It looks like
Right.
China will probably, and we don't have the full year data, but it looks like they will have produced 15 million tons roundabout of refined copper. And China's exports absolutely surged through the back end of last year. Going back to the US
Right.
issue, we think a lot of Chinese copper units got moved into the US, not CME deliverable, so sitting sort of invisibly off warrant. I mean, we
Right.
think between the CME and off
Yep.
CME inventory, there could well be around about 1 million tons of copper sitting in the US. Some of that's
Right.
now started to flow back out. So we
David.
don't see, in the refined market at least, we don't really see tightness.
David, thank you so much for your insights. We could speak to you for a lot longer. Unfortunately, we have to leave it there. David Wilson, Director of Commodities Strategy at BNP Paribas, joining us there in Singapore. Now, coming up, Somalia and Saudi Arabia are close to signing a military deal. We look into what led to this and the wider implications of that next. This is Bloomberg. Saudi Arabia is finalizing an agreement on a new military coalition with African nations Somalia and Egypt. Bloomberg has learned that the deal aims to foster more strategic collaboration on Red Sea security as well as military cooperation. It comes as Saudi Arabia tries to curtail the UAE's regional influence as tensions between the two have risen recently. For more, we're joined by Bloomberg's Sam Dakar in Dubai and also Simon Marks in Nairobi. Both of them have done extensive reporting on this. Sam, let's just start with you. Why is Saudi Arabia looking to curb the UAE's influence, and why now?
Thanks, Jen. Good to be with you. I mean, first of all, the rivalry between these two Gulf powerhouses, Saudi Arabia and the United Arab Emirates, is long-standing. There are tensions even between the two leaders, Crown Prince Mohammed bin Salman and President Mohammed bin Zayed of the UAE. What's new is how this has burst out into the open and in a rather aggressive way. And it all was triggered by this offensive by separatists in southern Yemen that are backed by the UAE that captured two provinces, including one adjacent to Saudi Arabia. And that was a red line for Riyadh. So it basically used that as an opportunity. I mean, it bombed, it was very dramatic. It bombed a shipment that it said the UAE was sending to the separatists of armored vehicles and weapons. The UAE obviously denied this. The Saudis used it as an opportunity to drive the United Arab Emirates completely out of Yemen. And I think, but this is bigger than Yemen. I mean, this is really, Saudi Arabia sees itself as the leader of the Arab and Muslim world. It sees itself as the one kind of setting the tempo when it comes to resolving all the conflicts around the region. It also, there's a lot of bitterness in terms of Saudi Arabia believing that the UAE has pursued economic policies at the expense of Saudi and other members of the Gulf Cooperation Council. And we know that the UAE is negotiating currently a free trade agreement on its own with the European Union.
Simon, jump in here because, as Sam was just pointing out there, potentially resolving conflicts. You've reported it extensively on Somalia. Why? What does this potential partnership signal to you?
Yeah, well, you know, Somalia has been a bit of a vessel state for the various interests of larger countries in the region. And we've seen over the years, the UAE has looked to get in areas of state control, such as Somaliland, where they've got a major port run by DP World in Berbera. And they've also got interests in Puntland, which is another sort of semi-autonomous state in Somalia that has many disputes with the federal government, and they've also got port and strategic infrastructure placed in the city of Bosaso, where they can, you know, make use of that for their various interests across the African continent. And this has always perturbed, I think, some people in the Somali government who want more federal control over their country. And so what you've seen here really is Somalia take a stance against that. They've had enough of not having control over such partners in some ways. and they've annulled all agreements and shifted towards Saudi Arabia, which is in full support of Somalia's territorial integrity and sovereignty. So by going the Saudi direction, they're really choosing a partner that will stand by them as a nation, as a country, in all the different forums, be it the UN or the Arab League, for example. And it's an interesting one because Saudi Arabia hasn't actually offered that much material support up to date to Somalia.
And Sam, what are the potential implications if we do see, in fact, this alignment happening between these two Gulf leaders? What are the implications of the relationships between these two Gulf leaders if we do see a realignment between Saudi Arabia and Egypt and Somalia?
I mean, I'd rather focus a little bit on the rift between the implications of the rift between Saudi Arabia and the UAE broader than Somalia, because this is really bigger than Somalia. I think, first of all, these are two key U.S. allies. The U.S. looks to them. President Donald Trump looks to these Gulf powerhouses for help in resolving conflicts in the Middle East, Gaza, Syria, other places. And also, obviously, Iran, right across the water, with the U.S. looking to target Iran and Iran threatening to target U.S. interests in the region, including in the Gulf. So, I mean, the U.S. can't afford to have these two allies basically on opposite sides. And also, you have to remember that a lot of companies that are based here in Dubai do business in Saudi Arabia. So this could be potentially problematic for them. And also, both of them are members of OPEC Plus, big members, and they've sparred in the past on production quotas. So, I mean, there are huge implications if this rift continues.
Yeah, it's fascinating reporting from both of you. Sam Dagher in Dubai and Simon Marks in Nairobi. Thank you both so much for bringing us your latest report there. Now, coming up, the U.S. ramps up its criticism of South Africa over Iran's participation in naval drills. We'll have more on the rising diplomatic tensions next. This is Bloomberg. The U.S. is ratcheting up criticism of South Africa following joint naval drills involving Iran and other BRICS nations. Washington raised concerns about Iran's participation in the exercises, further straining ties between Washington and Pretoria. For more, we're now joined by Bloomberg's Paul Vecchiato in Cape Town. Paul, what has America's stance been on those naval drills, and how is Pretoria responding so far?
Good morning. The United States Embassy last week expressed its disappointment over these drills and pointed out South Africa's holding these drills with countries that have been accused of severe human rights abuses, and this is in contravention of South Africa's own constitution. Secondly, it seems the presidency, the South African presidency, is distancing itself from these drills, especially the participation of Iran. And this has prompted the Minister of Defense to start a board of inquiry to find out why the president's orders on Iran not participating were disobeyed by the Defense Force. I was told by her spokesman this morning that that report will be made public because it is in the national interest, although that board has to start yet. Then secondly, in terms of the bigger picture, the United States has passed, the House of Representatives has passed the Africa Growth and Opportunities Act. That's their trade law with Africa. And it's still got to go to the Senate. Now, that does have a provision about U.S. interests, and we'll see if that'll be could be used to the detriment of South African exports to the United States because of these drills.
Well, Paul, let's just stick on that because we already have seen tensions between the U.S. and South Africa deteriorating. What's the concern here with these latest drills and potentially the effect that that could have?
Well, the United States has been criticizing South Africa for its closer ties with countries such as China, which is a U.S. trade rival, especially, and then Iran. As we know, the United States and Iran have had some military action against each other. Also, Iran is going through a lot of internal turmoil at the moment. through the protests and reports of thousands being killed there. There's also South Africa's International Court of Justice case against Israel over the whole Gaza issue, which the United States opposed. So there's been a lot of friction between the two countries. The United States has also allowed white Afrikaners to go through as refugees, something which the South African government opposes. So there's been a lot of friction, and this seems to be the latest in a round of friction. The big difference here is that President Cyril Ramaphosa seems to be distancing himself from the Defence Force decision to allow Iran to participate.
Right, and we'll wait to hear what the South African government says about Iran's participation. Bloomberg's Paul Vecchiato in Cape Town. Paul, thank you so much for joining us. Now, for a look at some of the other stories we are following. South Africa has declared a national disaster after severe weather caused deadly flooding across several provinces. The government says heavy rain, strong winds, and lightning have led to loss of life and major damage to infrastructure and property. Authorities say all state agencies have been instructed to step up disaster response and recovery efforts. President Trump says he's offering to resume U.S. mediation between Egypt and Ethiopia over the Nile Dam dispute. Trump says a successful approach would guarantee predictable water flows for Egypt while allowing Ethiopia to generate electricity from its massive hydroelectric dam. The dispute centers on a massive dam Ethiopia says is vital for power, but Egypt fears it could threaten its water supply. And Senegal has won the Africa Cup of Nations after a dramatic final against host Morocco. Papa Gueye scored the winner in extra time to seal a 1-0 victory after a controversial late penalty decision sparked crowd trouble and briefly saw Senegal's players waft off the pitch in protest. That is Horizons Middle East and Africa for you. Stick with us for Daybreak.